All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We're finally seeing a little bit of change in the market action here today, and so let's go out and take a look at it here, and let's just start with the S&P 500. And when we just come to a daily chart, right? It's a little bit of pullback here today, right? A little bit of pullback, okay? And it's the biggest pullback that we've seen in the market for a while. We had this one day here in the beginning of February, but this is one of the worst pullbacks that we've seen in a while. It's definitely the highest volume one, and it's definitely the one with the most kind of change kind of going on out there in the market. It's one that looks really big if you're zoomed in, micro-focused on the market. It looks huge. But, if we zoom out a little bit, it's, we're just pretty much to where the market was all week last week and just kind of chilled out all week last week. One of the things that we tend to see happen when a market converts from bullish to bearish and makes a more kind of major change is we see that the market will move outside of its average true range. Okay? Now, currently, the average true range on the market is 2.7. That means on any given day, the SPY, its average range over, the average over the last 14 days is basically 27 points. Okay? This is something where, okay, it's moved 1.6 here today instead of 2.7. Right? It's moved 16 points instead of 27 points. It still hasn't moved outside of its average range. Now, it could by the end of the day, could very easily by the end of the day, but what we tend to see is that when the market starts to move outside of its average true range, the path of least resistance is lower. As long as it's moving within its average true range, path of least resistance tends to continue to be higher. We saw this pullback right back here. Gap off of the 200-day moving average. All right, down we're going to go. But one of the things that didn't happen on that gap is we did not see the market move outside of its average true range. Okay? And so this is one of the things that, if you're looking at going, well, is this a small pullback or is this a game changer or something like that? This is one of those things of many that can really kind of help to kind of, bring the focus in of whether there's major change happening or whether we're just talking about a blip in the radar right here. Okay. And so far, it suggests a blip in the radar, right, in terms of the market relative to the average true range. If we go and we look at the bullish percent index, something incredible is happening today. For only the third time since December, since the end of December last year, for only the third time, we're seeing the bullish percent index in the red. Now, it's only down 1%. It's only down 0.8, right? It's barely budging, but it's in the red, right? Look, I mean, if you're bearish on the market, this is actually a victory. And I think that speaks volumes to how bullish this market has been, this is kind of a small bearish victory here today. But that's just the reality of what has been. But we are seeing some subtle changes. If we come in and look at the number of stocks above the 7-day moving average, right? We talked this needs to kind of make a shot down below the kind of 40% area. Well, we have 36% of the S&P trading above its 7-day moving average. That means that over the course of the last 3 days, we have had the majority of the S&P 500 move below its 7-day moving average. And we've seen the actual index move below its 7-day moving average for the first time in a while. Now, the number of stocks trading below the 20-day moving average has dipped from yesterday, but it's still in a very kind of bullish type position, here overall. But we're definitely seeing some, pullback elements, really coming into play here. Really coming into play here today when we look at some of the metrics. I talked earlier this morning about small caps. Small caps were holding up better this morning. Then they've kind of given up with the market overall. But one area where we do see the lag here today is in the tech area, in the Qs. They're down about 1%. We're seeing things like Micron, AMD, make some outsized moves, right? We talk about the average true range on the market. Well, this applies to individual stocks, right? And when they start to move outside their average true range, path of least resistance tends to be lower. Well, the average true range for AMD has been about 96 cents. It's moving about 88 so far here today, right? So not quite there. Micron, average true range, $1.59. It's moved to $1.74 here today, moving outside of its average true range for the first time in a while, right? But you come into Bank of America, it's squarely within its average true range. You look at a Honeywell, squarely within its average true range, a Caterpillar, squarely within its average true range. The majority of stocks are not moving outside of that average true range. Even in the tech space, Apple, it's not moving outside of its average true range here. Overall. One that's on my radar is Amazon. It's not quite outside of its average true range, but we've talked about this chart and some of the emerging bearishness in this chart, and it's sitting near yesterday's lows. Very interested to see if it's able to break those. If it is, I do want a piece of that action here overall. We saw energy, oil prices up pretty good here, or down pretty good here yesterday, on Monday, up pretty good here this morning. Some of the energy names like Chevron, they've weakened a little bit this morning, but they're starting to see some strength here as things kind of shake out. I did go price some Halliburton puts for the challenge here this morning, and I just didn't have enough to pull the trigger here on it. If you look at the hourly chart here for it, you can see, it opened above the 7-hour and then dipped below the 7-hour. But just kind of the way it's happening, it's too gradual, too just slow to suggest it's ready to break right here, right now. And so have to, I decided I would hold up and wait on that just a little bit. But if you look down the board, it's interesting. GE is trading in the green, Tesla in the green, HSBC. Some of the battered names are less investor-friendly names, trading in the green here today. But the Boeings of the world just, keep on trucking, higher and pushing along here. But it's a lag in tech. The Twitters of the world, we're seeing a lag in some of the consumer staples. One of my favorite, Pepsi. I'm bearish Pepsi. Fresh break of the 7-day moving average here today, and pushing into the gap from earlier this month. And this is a gap I expect to fully fill. And I've priced out the options. I haven't pulled the trigger here, just yet, just because this would be a trade based on the daily chart. So I do want to see where the daily chart ends up. But overall, there's a lot more breakdowns out there than what there have been, for a while. Now, can we argue that these are uber bearish and we're just going straight down from here? Yeah, we could argue it, but it's not a great argument. Most of this is happening in a contracting band environment, right? Bollinger's contracting. So, if you look at price targets on a lot of stocks, even something like an AMD, right? You look and you go, okay, where's the first set of support come in? Well, right at the lower band, right? That's not too far away, right? But chances are pretty good it gets there. And a lot of things, that's kind of what I'm looking at and going, okay, do I want to play something down to its lower band? We have some exceptions, things like J&J, just not giving that type of action. Things like U.S. Steel, which it's off its highs here today, but holding on to the bullish elements of its chart. So it's not, we're not talking about a massive everything breakdown type of a thing. This is a isolated. Well, this is a very differential, type of move down that hasn't moved outside the average true range here just yet. And so while it's showing a few more cracks, it's not something where you go the bulls are broken here. Just yet, but anyway, that's some of what's going on now in the stream. I put in what the driver was, and it was comments from the U.S. trade negotiator about where China and the U.S. were on things, right? And it wasn't as rosy as U.S. President Trump, tweeted on what was it, Sunday night. So that was the highest correlation in terms of everything that's going on, the highest correlation to the drop in futures that we saw. But we've had factory orders which missed expectations, and factory orders came out here on this minute right here, right? You see not much of a reaction, not much of a market care with the factory order miss. At the same time, we saw the pending home sales data, which was a substantial beat over the expectation. But again, not much volume, not much action. Those two, that just tells you those two are non-events. Market doesn't care. Market's looking at something else, right? We have Powell in front of the Senate today, testifying and speaking. We have Cohen, who, former Trump lawyer who's testifying. We have, and then we have the trade negotiator coming out with a statement. So there's a lot of winds, kind of swirling around, here this morning. And we saw this kind of 20K volume, come into play. Now, what does this mean? Well, this is much more of a bottoming volume on the day than anything, right? We see the market, first, down it goes, big 20K volume on a shot down, right? The market went and ticked a little bit lower, but generally it's going to be difficult for the market to close below this level of 20K volume on the day, right? So if I'm looking at, I'm looking at some possible bearish breakdowns, and I see a bottoming in the market for the day, right, or the odds are pretty good that the market is bottomed on the day, well, there's no rush, right? There's no rush for me to jump in and to get a bearish position filled. I can allow things to play out just a little bit. Now, if the market decides that later on this afternoon it's going to sell off and break below this 20K level, what's that indicate? Well, that indicates there's a greater level of weakness than what we're talking about right here, right now. And that would indicate, hey, you know what? Time to get pretty aggressive, at least for me. And I would look to get quite aggressive, to the downside if we see that happen. If it's a little splash below or something like that, yeah, fine. But if we see some, movement below the lows today, outside the average true range on the market, that will prompt later selling. But so far it is what it is, and it is what we've kind of looked at here, and something where it looks really big if you kind of compare it to what this bullish rally has been. But it's not all that much if you're looking for a major kind of turn, major breakdown, major shift between bulls and bears out there in the market right now. Obviously could materialize to that, but it isn't, as it sits at the present. Okay. Some other interesting charts here this morning. Let me come in. I just want to show you some of the 3-7 crossover action that's happening out there, where the 3-day moving average is crossing below the 7-day moving average. Okay, and show you the stocks in the S&P that action is going on. Now these aren't all kind of Katie signals or whatnot, but you can see where they are. It's tech. AMD, Micron, Facebook, NVIDIA, Applied Materials, Texas Instrument, tech are the ones with the big volume on them here today. Adobe, Skyworks, Symantec, Google, all in this, thing, with this action happening here. But it's not just tech. We see a lot of real estate, a lot of financials in this area, but these are some of the big names where that the 3-day moving average is moving below the 7-day moving average, and we see it here with something like a Pepsi, which I obviously want to short and to trade lower. This could actually be a Katie bear signal by the end of the day, but we'll see how that how that plays out here into the end of the day here today. Okay. All right. So anyway, those are just kind of my comments on what's going on, kind of what's happening, here early on, and obviously there's a long way to go in the market. Here today there's a lot to happen. So it's one where we could see this change, but the indications so far, they're not of a big bad bearish breakdown. They're just cracks, and that's not the type of environment I want to load up in to the downside for the challenge here here just yet. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.